Hi, everyone. Welcome to the Timing Research show for June 15th, 2015. My name is David Kosmeter. I am the creator of Timing Research and the newsletter. I publish the report that I published last night was the 90th weekly report from Timing Research. If you're new to the newsletter, basically I send out a survey each week and ask traders to give some feedback about current market conditions and what they're watching for or what they're predicting will happen over the next week. And then I put that data together and publish the report on Sunday evenings. So today I have several traders with me again to discuss the report, and Dave Landry is guest hosting for me again, so I'm going to go ahead and turn it over to him.
Okay, thank you, David Kosmeter. I appreciate you having me back once again as guest host. Looks like we got some veterans this week, some friends of the show. We have AJ Brown of TradingTrader.com, Cameron Yost of DimensionTrader.com, and Michael Filighera of LogicalSignals.com. Michael's having some technical difficulties, but he should be joining us shortly after a quick reboot. Oh, there he is right there. Hey, Michael, can you hear us yet?
I can hear you, but you can't hear me.
Yes, we can.
Oh, I can hear you fine.
Oh.
You sound great.
We're live.
You sound great.
Great.
All right, AJ, let's go to you first. Are you in the States or are you in Sardinia today?
I just got back from Sardinia about 10 days ago.
Oh, cool. AJ Brown of TradingTrader.com. AJ, tell us a little bit about yourself for those of us who don't know you, and tell us a little bit about TradingTrader.com.
TradingTrader.com, been around since 2003, teaching people about trading stock options. And I've been trading since 1997, doing my thing. Yeah, we've been watching the market very carefully. I'm getting excited to talk about it today.
Cool. Well, we're glad to have you back once again. We have another veteran of the show, Michael Filighera over there at LogicalSignals.com. Michael, glad to have you back. Tell us a little bit about yourself, your trading, and LogicalSignals.com for those of us who don't know you.
Hey, Dave, I'm glad I got up and running.
Yeah, us too.
Yeah. I have been trading since 1979, which is longer than I want to admit. But I started out as a market maker here on the Pacific Exchange, and I traded here. I've traded in London, I've traded in Amsterdam, and I've traded in Germany before returning back to the United States. My focus primarily has always been options, but within the last couple of years, I've really switched strategies, and now I'm more of just an intraday day trading, and so I concentrate on the futures markets right now, and I've been having a really good time in crude, actually the 30-year bond,
yeah,
and the NASDAQ lately. And on Logical Signals, I give market updates, but basically it's just kind of like a trading blog, just kind of my opinion of what I thought was going on that day and what's happening. And then also I have a trade room where I have a limited group of traders, and we meet, and we're kind of our own little trading pet, even though it's all virtual.
Cool. Well, we're glad to have you back once again. How many of those languages you speak out of all those countries you've worked in?
I speak 4 languages.
Wow. What are those languages?
I speak English, I speak Dutch, German, Italian, and Italian. Yeah, 4.
Wow. Very impressive.
And I can get by in France if I get there, and I can actually spend a couple of days and just kind of warm back up to it.
Yeah, a little acclimation. Cool. I'm jealous. I'm trying to learn Italian, and it's not. It's a slow process. So, Cameron, you're up next. Cameron Yost, another friend of the show. I guess we won't have any controversy again this week. Cameron's of DimensionTrader.com. Cameron, tell us a little bit about your trading, and tell us a little bit about DimensionTrader.com.
Well, I'm jealous of the language also. I think it's fantastic when you can have you can express yourself in multi-different languages. One of my sons is that way. He picks up language right away. He's fluent in Russian, well,
wow.
Spanish, yeah. Anyway, yeah, I'm Cameron. I've been trading off and on pretty much options all my life, and about 7 years ago, started trading futures, and along with my options, and currently I'm with Dimension Trader as their customer service representative. And at Dimension Trader, they make fantastic futures trading software. It's indicator based, but it's working very well for a lot of us. We have a 3 days a week. We have a morning training room. It's different than a trading room because we're actually training people how to use our software. We do see trades because the software calls out when a potential entry exists, and we have guests in there. I'm going to encourage everybody who's watching the show, if they're curious in futures trading, to join us as a guest at TimingResearch.com. You can register right there on our website, and I'm sure we'll have more closing remarks when time comes.
Cool.
That's about it.
Okay. While we have you, Cameron, let's go ahead and ask you question number 2. Based on any technical fundamental indicators you want to use, would you predict that the S&P 500 will move higher or lower next week? And that's the close of Friday, June 19th. And then once you answer that question, rate your confidence, your answer to question 2. That's question 2. On a scale of 0 to 0 being no confidence and 10 being extremely confident.
Yeah, it's a tough week here to
try
to make a prediction, and I'm sure we'll be getting into that as time goes. But I'm gonna say higher, and my confidence level is not very much. I'll give it a 6.
A 6, okay. Just a little bit above 50-50. Okay. Well, actually, that's 0 is 50-50, so that's where it gets a little confusing. But let's go to you, AJ, next. Based on any technical or fundamental indicators you want to use, would you predict that the S&P 500 will move higher or lower by the end of this week? And that's Friday's close the 19th. And then go ahead and rate your confidence to answer question number 2, I should say, on a scale of 0 to 10, with 0 being no confidence and 10 being extremely confident. And then let me just explain the scale real quick. Mm-hmm. And Cameron, you could always change your answer if you want between now and the end of the show. But 0 is 50-50, means that you're not sure if it's going to go up or down, and 10 means 100% confident.
Oh yeah, I'm changing my answer right now. Then I'm going to go to a 3.
A 3, there you go.
I'm mildly optimistic.
Okay. All right, AJ, to you.
Well, and again, I wish this question was about where it's going to be at the end of the month or the end of the summer, but at the end of the week here, I'm going to say higher just because I think there's been a lot of excitement around what's going to happen with the Federal Open Market Committee meeting announcement and the quarterly press conference. I think there's a lot of excitement around these what's happening in Greece. I'm looking carefully at quadruple witching, but when it all comes down to it, a lot of these things, I call them transient external stochastic shocks. They come, they go, and the market just picks up where they left off. And in my mind, it's going to be higher, but I'm going to go with a confidence of 3 as well.
Okay.
We're trading a lot of neutral strategies here, a lot of theta decay. So.
Cool. Well, we'll let you flesh those things out in a little while. Is that a heat lamp on behind you?
No, that's my screensaver. I like to pretend like I'm a bee. It's a honeycomb.
Oh, okay. Looks like it would burn your retinas, though.
Yeah.
I'm not sure you're saving much of a screen. Okay. All right, Michael, to you next. Based on any technical fundamental indicators, easy for me to say, you want to use, I'm glad I didn't have to say transient, stochastic, and what was that other word there?
Transient external stochastic shock.
External stochastic shock. Based on any, and you can elaborate on that next question. We'll have you flesh that out. But anyway, back to you. I think we're on Michael now. Michael, based on any technical or fundamental indicators you want to use, would you predict that the S&P 500 will move higher or lower by the end of this week? And obviously that's the Friday, June 19th close. And then go ahead and rate your confidence on a scale of 0 to 10, with 0 being no confidence and 10 being extremely confident.
I am going to say lower. And,
okay.
I believe there are a lot of factors that are now pushing the S&P through some strikes that really kind of shake up the boys for expiration on Friday. So I think that the market will continue to just put in a little bit of a correction here. and I would rate myself as a 7.
Okay. Wow. Okay. Okay, AJ, let's go back to you. What developing events, they could be technical or fundamental, will you be watching out for next week? For this week, I'm sorry, that might have a positive or negative impact on the S&P 500 and other U.S. markets. And if you want to talk about those other things you just mentioned, feel free to do that now too.
So definitely, like I already mentioned, I'm not really gonna be watching it, but I know that there's an influence happening with the news headlines coming out from Greece. So I know that there's a lot of eyes on this Federal Open Market Committee that's starting tomorrow and ending on Wednesday. A lot of eyes on quadruple witching. I'm watching actually. If you look at a weekly chart, 2 years worth of data, you're going to see an ascending level of support that I've been watching carefully, and then we had a horizontal level of resistance that's really been tested. If you look kind of like put your glasses on using a quantitative analysis, look at how much trading is at these different levels, you'll see that that level of resistance that was tested a little bit in April and May but came right back down. We've got this convergence happening, almost like a contraction, range contraction. I'm looking for a phase change. You know, maybe what Michael's pointed out there is going to be something to the downside. I'm ready for either direction, for a move in either direction.
Spoken like a true trader.
Yeah,
Very good.
a true options trader where I make money whether the market goes up, down, or sideways.
So it sounds like you're seeing a compression volatility, and is that a longer term compression you're seeing?
Yes, yes, but I am expecting something to come down in the next 2 or 3 weeks. But as far as this Friday, I think we're going to stay the course.
That means that we could see an expansion of volatility then. If it's compressing, then the next phase would be expanding.
Absolutely, absolutely. I think it's going to start building in alignment with the July earnings season.
Okay. Okay, Cameron, let's go to you next. What developing events, they can be technical or fundamental, will you be watching out for this week that might have a positive or negative impact on the S&P 500 and other U.S. markets?
Well, I did what Dave said. I mean, I think that's a pretty good perspective of where this market's, what's happening in here. But this week, I think we're going to be news sensitive. I think FOMC is going to have an impact. I mean, we've got a lot of news this week. You know, as we go on, tomorrow we got housing starts. I don't think that's going to be a big deal one way or the other. But the FOMC is going to be the major player, I think, in news this week that's going to drive the market. And then as we get into Thursday, we've got unemployment. Friday we got the Philly Fed, or no, that's Thursday too, unemployment and the Philly manufacturing index. So I think it's going to be a news-driven week. I don't know how these traders are going to try to peg the market here. We got with the expiration coming up Friday. It's going to be an interesting week. But I just come back. I think when it's all said and done, with the FOMC, bad news.
A lot more said than done.
Yeah. Anyway, but it's going to be an interesting week, that's for sure.
Cool.
I think Dave's right. Try to stay neutral. And
yeah, actually, I think. Okay. All right, Michael, let's go over there to you. You waiting patiently. What developing events, they can be technical or fundamental, will you be watching out for this week that might have a positive or negative impact on the Ps and any other U.S. markets? To you, Michael.
Thank you. I'm just basically going to piggyback over what's already been said. I agree with what's already been brought to the conversation. I think that the markets are in a position where they're going to start to line up around strikes, particularly in the S&P. And any option trader, you guys play this game. We all play it virtual. And so what we've got is 2075, 2100, 2050, and then 2025 in the S&P. If they start really falling through those strike prices, then you're going to see a lot of market makers are forced to jump into action, and they've got to adjust and they've got to pull in deltas. So depending on how severe any of these moves get would aggravate the market. I agree with what's already being said as well, that there's a lot of energy that will be built up around the FOMC meeting. But I think that energy is really just algorithmic and not so much that it's going to be based on anything that the FOMC will add to an ongoing conversation, which is when are rates going to go up. I think that's pretty much all been factored into the market. And I believe that if traders really took a hard look at the 30-year bond and the 10-year bond, they would realize that bond traders have already kind of factored in a quarter point jump in interest rates. And so I think it becomes more of just a game, and it'll be algorithms on Thursday. And so, but I think basically by Friday, realistically, what sits in the market? I think Greece. Each morning we've kind of come in and we've seen the European markets really hit everything because they're really quite worried about Greece just pulling the plug. And I think that does have an effect on the global markets. So again, echoing what we've already heard, the severity or the length that they're going to hold on to anything negative, I think just that's really the question. Yeah. And right now, it seems that everything seems to be very, very short term. And as we get to these long-term support levels, which have already been really spoken of, you will find a lot of traders will step in blindly. That's it. Hit support, we come back in.
Yeah.
And that could force the next move, which could be up.
Well, that's what's kind of fascinating, and you option guys must be loving it, is that the market's stuck in a range, but it's been bouncing around quite a bit within a range, so you got volatility in a range. It's like best of both worlds for you guys, so congratulations.
Yes. Yes.
Or as we say in the South, the sun doesn't shine in the same dog's ass every day. I didn't give my answer about the market. I'm going to go with up, and I'm going to go with the confidence of about I'll go with about a 6 on that. Instead of trying to outsmart the market, I'm just going to stick with the longer-term trend, and I've drawn in here for you what I call daylight, and this is the lows are greater than the moving average for most of the time. If you look at the low and you look at the 200-day moving average, and we've only had about 5 days of daylight below that moving average. Now, one thing that I like to preach is everything works better with trend. If you look at some very simple trend following systems and the market is trending, they absolutely print money. And I'm a trend follower. Some people actually call me a trend following moron because I keep things really simple. But if the market's going up, then I want to be long. Unfortunately, we have been going sideways since about November or December of last year, so it's been kind of abysmal as far as a trend trader. As far as that's concerned, as I just said, you guys, you option traders in here are having a field day with this volatility, but keeping within a range. I'm going to continue to err on the side, again, of the longer-term trend. I will be watching, I would say, about 2050 in the S&P 500. That would be a level of support, the 200-day moving average. And then after that, probably around 2,000 or so would be the bottom of the trading range going back to last fall. So I'd be concerned about that. Michael pointed out bonds. I think let's just pull a TLT real quick in here. You can't see my trend lines because they were drawn on a different color background, but you can see that obviously we've broken well below the 200-day moving average. That's in and of itself, that's no big deal, but it is watched, and you can see that we are in a pretty serious downtrend. And we've pulled back in here, and now it looks like we have a new leg lower. I was glad Michael brought it up. Again, no controversy this week. He seems to think a quarter point's already baked into the cake, and if you look at this bond market, which has been, I wouldn't say a route lower, but it's been headed lower for quite some time here, almost this entire year. So sooner or later, that is going to put pressure on the market. It's not the absolute level of interest rates, whether they're 0 or 0.1 or whatever. It's the delta of the change in rates that gets everybody's panties in the wad, so to speak. So I'd like to see, and you hate to use the word hope in this business, but I hope the bonds stabilize for a while. Maybe, like Michael said, if everything's baked into the cake, they'll stabilize, and then we can continue this longer-term bull market. The only other thing I want to point out is that even though this market's been going sideways, there still have been a lot of opportunities in areas like these second-tier stocks. And some people argue that when you start seeing it, some people claim it's when pigs fly, but you can make a lot of money when those pigs fly. And second-tier China stocks have been doing really well in here. IPOs have been doing really well in here. and a couple other speculative or more speculative areas, I would say, are doing fairly well in here. So you can still do fairly well in those areas, but it's getting tougher and tougher and harder to find setups. So what we could end up doing is sitting on our hands for a while as a trend follower. I don't try to change methodologies or sell options or do something that I'm not used to doing just because the market doesn't cooperate. I'll just sit on my hands for a while and let the market come to me. Okay, let's go back to you, AJ. And the question of the week is, let me get it to make sure I ask it properly. What technical indicator influences your trading the most?
You know, when it comes to actually pattern recognition, I always split it up into two components, pattern recognition and then pattern utilization. And I always emphasize, especially with the clients of Trading Trainer, that you really have to make sure you recognize everything fully, and I do the same thing. Once you recognize it, then you assign a confidence level. Then you can go back and pick the trading strategy that not only matches the pattern, but how confident you are around that pattern. When it comes to pattern recognition, one of my favorite indicators is the moving average convergence divergence. And that allows me to really understand something from maybe 5 or 6 different viewpoints. Combine that with perhaps a oscillator, and you're really cooking with gas. So the moving average convergence divergence is probably the indicator. If I had to pick one to be on an island with, that's what it would be.
Okay. All right, Michael, let's go to you next. What technical indicator influences your trading the most?
When I answered that question on the survey, I probably was the last one because I said algorithms. And what I meant by that is that I have some algorithms that I have put together, and that's what I use to trigger my buy and sell signals. And they're really wrapped around an ATR, and I changed the multiplier, not the period, but I changed the multiplier to fit each individual market. And by changing that multiplier, it's going to change how quickly it's going to switch from long to short and move in and out. But again, this is all based on a long-term trade for me these days is 5 minutes. So that makes a big difference. So I think, but as far as other known indicators, I still love the stochastic. I think that was ingenious. And I love the MACD actually as well. So I will piggyback again on AJ, and that I think the MACD is extremely useful.
Yep.
Once again, no controversy. So, you know, I'm always picking on the day traders, but you seem pretty calm about it because most day traders seem a little frazzled and all. And I was doing some business with somebody a while back, and I thought their house was on fire because they're screaming and hollering every 3 or 4 sentences. But you seem pretty calm about it. How have you survived this long and not let the stress get to you of making all those decisions? And I'm kind of curious actually about this.
I think that, to be very honest with you, a lot of it is meditation.
Wow.
And I think that when you're taking a very, very short-term view, I think Buzz, I think is that his nickname, the gentleman from Top Gun?
It's actually Wiz.
Wiz. So I had the Z right.
Yeah, you were close.
He was actually really hit the nail on the head, and that is that if you're going to step in and you're going to trade, no matter what your product is and no matter what your time frame is, you've got to be able to stay focused and not get pushed or shoved if your trade doesn't work, because it's very similar to when he's out flying a jet, a fighter jet. Your reaction has to be boom. So that's how I I push the emotions out, because my reactions are mechanical. And so, you know, while we were talking, I just got a signal in the NASDAQ. I just went in, I shorted it, but I've already bought it back. So,
well, you know, the thing that I bring up, and I've known a few day traders who have literally gone crazy, and what I bring up is that I think we're only wired to make so many decisions, and then I think that a few people are gifted like yourself and could actually do it. And that's kind of the whole point I make. And I piss off the day traders sometimes because I'll write in my column, for you crazy ass day traders, I'll throw out something like an opening gap reversal or something that, like Greece this morning, for instance, I'll throw that out. But yeah, my point is be as close to the market as you have to be, but no closer. So if you're positioned to swing trading to intermediate term, longer term trading like myself, if you're watching every tick, it's just going to be detrimental to your life. And I guess,
Yes.
well, of course you're 5 minutes, so I guess you are watching a tick chart. But but as long as each little tick doesn't make a new decision, I think that well, I couldn't do it, but I think that you figured out a way around that. So that's cool. I'm glad to hear. I'd like to flesh it out more sometime with you. Cameron, let's go to you. We hadn't forgotten about you over there. What technical indicator influences, easy for me to say, you're trading the most?
Well, I'd have to say the fibs. I kind of watch those close. I like the MACD too. That's when I'm trading futures. I'm definitely have my eye on the MACDs, but that and the fib lines. I like some of John Carter's stuff too. He's got his snow line, his evergreen. I'm not sure if that's from Carolyn, Fib Queen, or from Carter, but I think those are pretty interesting indicators too. Some of this stuff I really don't understand. It's like a car. I can drive it, but I can't necessarily build it. Can't tell you why it all works. But that's where I'm at.
Cool. Well, I'm going to go ahead and share my screen real quick if I can make it work, and I want to show you my three favorite indicators. I have them on the top of my website. And here they are. Uptrend is an arrow that looks like this. Downtrend looks like this, and sideways looks like that. In all seriousness, I've studied a little bit of everything throughout my career, and I will occasionally use a moving average, and I have a moving average pattern that I call the bow ties that I like quite a bit, and it's become probably my most popular pattern with most people because it's easy to recognize and it somewhat quantifies things. But I really don't use any indicators at all. I just believe in looking at the chart and see it. Just ask yourself first: is it generally going up? Is it going down? And then where a lot of people get tripped up and confused is sometimes the market just goes sideways, and that's the toughest part of all because there's no trend there and there's not much to do. And lately, obviously, the market overall has been going mostly sideways, and there hasn't been a lot of action that needs to be taken. Okay, AJ, let's go back to you. Any closing thoughts? AJ Brown of TradingTrader.com, or anything else you want to tell us about TradingTrader.com?
Well, I want to piggyback on what Michael said about meditation and also piggyback on what you said. There's a mental component, but if you don't have your emotional and your physical component of your existence in sync, you're never going to be able to do this sport. And if you don't have the understanding that failure is okay and it's okay to have a losing trade so long as at the end of the month, at the end of the year you profit, you're going to be doomed. One of the things that I just took up since I've been back in the States, I've just had my second lesson on trapeze school. So taking up something that lets your mind take a rest will let you come back. Yeah, that's what this, if you can see.
I was going to ask you, what's the other guy look like?
That's exactly where this is from, because that bar's heavy.
I would not have taken bets on that's how you got hit in the nose.
And I've got that big Italian nose. But the scoop is you got to keep your mind at ease. And I always talk about that with the Trading Trainer guys. I want to definitely invite all the listeners. We're doing a webinar on Thursday specifically around trading these sideways channels, and I'm going to go over again how I divide things up between pattern recognition and pattern utilization. I'm specifically going to go over 9 different tests to determine if you've got a high confidence sideways choppy moving market, and then 5 different strategies, option strategies to trade that. And all you have to do, and I'll send an email link out to people, but event.tradingtrainer.com, and you can go register for this Thursday's webinar, event.tradingtrainer.com. But I invite everybody to come, just listen. No you're not signing up for anything else besides just coming and listening to those strategies, seeing if they jive for you.
Cool. I started working on a course on trading psychology, and I thought it'd be a couple-hour course, and now it looks like it's going to be 2 days, and I don't know how I'm going to keep it to just that because it's such an involved concept, and then the emotion things are very important. And what I'm wrapping my head around and doing a lot of research on now, so I could explain it to everyone, is that one thing that's been proven is without the emotional part of your brain, you cannot make any decisions. And Denise Shull, I think, talked about that first. I saw her at a seminar, which I was also a speaker at, over at Golden Gate University in San Fran. And I'm reading some follow-up research by a gentleman called Damasio, D-A-M-I-S-O, I think, nice Italian name too. And it's very fascinating. So without that emotional part, you can't
Function.
you can't trade. So I like what you said, AJ, about being willing to learn, being willing to lose, and that's a hard part for many. And as long as you have a viable methodology, which obviously you do, that's fine. And you can't kiss all the women. You're not gonna get you're not gonna make money on every trade, but longer term, you'll do just fine. Cameron, let's go to you. Any closing thoughts? Anything else you want to tell us about DimensionTrader.com or your own trader or the markets?
Well, like AJ, I'll send out a link here later on, and just encourage people to join us at the Dimension Trader training room, and you can kind of see how we trade futures. It's pretty interesting. So just get people in there and take a look at it and feel if it's for you.
All right, cool. All right, Michael. Any closing thoughts? Anything else you want to tell us about yourself, your trading?
Is that don't be afraid to jump in. It's been a great time. I think that trading is always going to be an adrenaline rush, and I think if you can learn how to control, as we've all been saying, some basic emotions, then you really can commandeer your own path. I wanted to add that one of the things that I find very unique to the logical signals trading room, I know we're all talking about our individual trading rooms, and I think that every trading room has a benefit to traders, but it's making that connection. It's making sure that those people are connecting neither to the strategy or what's being done so that they can contribute and also take part in the trading. But at Logical Signals, we've added that psychological, the emotional factors and how they really play in. And some really good people that I've traded with for many, many years, but have kind of gone off and gotten their degrees in neuropsychology and other strange subjects, kind of come back. And so we've put together some courses and some additional information on what really does stop traders from being consistently profitable. And most of the time I have found that it's really just what's between your ears. It's not the market, it's not other traders, it's us. And if we can learn to break down and deal with those connections, you know, those old patterns that will come back in and haunt us for the rest of our lives, I'm helping people to learn how to recognize them, how to deal with them, and basically how to make friends. You can't eliminate anything. You know, stuff that's been around is going to stick around, but you certainly can make friends with it.
Yeah, absolutely.
No.
You know, once again, there's no controversy on the show. I tried to prod you a little bit on day trading, but that didn't work. So,
because I meditate, Dave.
Yeah, no, I'm impressed, and you know, maybe I need to. I've meditated here and there. I just never get around to doing it much anymore. So maybe I need to try that and some trapeze work.
You know what's really funny is that in my experience, you know, you see folks every single successful trader I've ever I've been meaning to write a book for the last 10 or 15 years about all these people and the common themes of successful traders, and it is that they've mastered their psychology, they've mastered their emotional self. But you know, you go to one of these trading events and you see the guy who's talking about that, and either nobody's showing up for his talk, and or if he's got a booth, they put it behind the snack bar. It's just that people seem
right next to the money management booth on proper money management.
Absolutely. People are so much interested in either in a software tool or in the indicator of the month club that it's just so interesting that this is the solution, and it's just not so exciting for a lot of people.
Yeah, it really is. I mean, I've been since I started working on this course, which will probably take me a year. Like you said, it's going to take me a year to write it, and nobody's going to show up, but that's fine though. So. But yeah, it's absolutely. I've been going to bed at night, and waking up early, thinking about how vitally important it is, and close to money. It's right in there with money management. But any one piece, I kind of see it as a three-stranded rope or a three-corded rope, however you want to look at that. You have the money management, the methodology, and then obviously your mind, and all three are interwoven. And but without any one piece, it won't work. But especially if without the proper mindset. You're pretty much doomed from the start, regardless of how great the indicator or the person you may be following or your mentor may be.
Absolutely.
Which is kind of odd because I like talking about myself. I forgot to mention who I am and what I do. My name's Dave Landry. For those of you who don't know me, I believe you can only predict the short term when it comes to the markets, and I'm pretty adamant about that. I'm not like Michael watching every little tick, but I think that you could look 2 or 3 days out. You can't always predict the short term, but there are certain reoccurring patterns, such as pullbacks, which I like to play in the direction of the trend, and certain emerging trend patterns. I have a 21-page report which covers, I'd say, probably 90 to 95% of the rest of the methodology. The rest is just some details, and as we discussed quite a bit today, trading psychology. By the way, it's fascinating. Almost every show, we end up spending a lot of time on trading psychology, which is one of my favorite subjects here, so that's kind of exciting. We did that again this week. I do have a webinar on the methodology. It's free. It's tomorrow night. You could sign up on my website or check TimingResearch.com. There should be a link there or going out at some point in time, but you could always check the countdowns on my website if you're interested in that. I think that's it. I appreciate everybody coming today. We'll let David wrap it up and give the website addresses out once again. But any questions about what I do, you can send me an email, dave@davelandry.com. David Kosmider, thanks again for having me, and thank you guys for showing up. I appreciate that. To you, David.
All right, thanks, guys. I just want to remind everyone who's watching that you can go to TimingResearch.com/reports to download this or any of the past reports there. And later in the week, Friday or over the weekend before Sunday afternoon, be sure to go to TimingResearch.com/current survey, fill out the survey, and then have your responses be part of the next report that's published. So. And I just want to thank my guests again, AJ Brown of TradingTrainer.com, Cameron Yost of DimensionTrader.com, Michael Filighera of LogicalSignals.com, and of course Dave Landry of DaveLandry.com. Thank you for hosting again.
Thank you.
Thanks, guys.
Thank you, guys.
Thank you.